Welcome back. I'm Pratap here. Today is 10th September 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing the tab community, or whichever the tab you see, you click on the tab, you get access to this post. This post is having a YouTube playlist link that will take you to all the training videos. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. So far we have completed 25 training lessons. From all these 25 training lessons, we have released 65 training videos. So you need to start our training from the first lesson. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1. All the training lessons are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you because important updates we are providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones. So yesterday at the end of the day report, we have identified 3 high liquidity zones useful for our today's trading point of view. So out of these 3, we got trades from 2 stocks. So the first one is ABB. This is the 75 minutes high liquidity demand zone. So we have a rally 1, 2, 3, 4 base candles and again a rally candle with a hidden body. And this 75 minutes zone fine tuned with 15 minutes time frame. Let me show you. We have multiple 15 minutes zones. This is the first one at the bottom. We have a drop base rally at the hidden body. You will get the very good body and then a sufficient expanded range candle, drop base rally. This is the 15 minute zone. You may ask, there is another rally base rally, but this is already pierced, so we cannot use this zone. Previously, this zone gave a trade here from here to here. After that, this one is violated, and then prices picked up from this zone, the fine-tuned 5-minute zone. But this is currently working like a high liquidity zone that we will see in the 5 minutes time frame. And previously also again from the same zone, it gave another test and there was a price movement. And during this price movement, it has created again a new 15-minute zones. Another 3 15-minute zones are created. We have a we have a ERC candle, a drop candle, we have 2 base candles and a rally candle. So here we have a 15-minute zone, but this 15-minute zone is not having a proper fine-tuned 5-minute zone. That we will see, I will show you, because I didn't draw any 5-minute zone here. But here again, you have another rally base, and this is another leg candle, but part of the base. And here you have a leg out with pro gap. And also you will get here some more hidden body. So rally, base, rally. And here we have an excellent fine-tuned 5-minute zone. And today we got the trade from this zone. And also we have one more zone. We have a drop, 2 base candles and a rally candle. Drop, base, rally. This is another 15-minute zone. This is also having a fine-tuned 5-minute zone, but this one is stopped out today. Okay, now let's move on to the 5 minutes time frame. But before move on to the 5 minutes time frame, in the 15 minutes we have a target zone. We have a ERC candle as a leg in, you have a base candle, you have again a drop candle, So this is the target zone for 15 minutes targets. Okay, now let us look into the 5 minutes fine-tuned zones. So at the time of this zone creation, there was an excellent fine-tuned 5-minute zone. Still it is working very well. So we have a drop candle, three base candles, and again a rally candle with hidden body. So this is a hidden zone concept. Because this candle is looking like base candle, but actually if you add the hidden body, this is going to be a rally candle. Such kind of hidden zones, they work very well. See, already it is tested first time. After that again this zone is tested second time. Again this zone is tested third time. So this zone is working like a high liquidity zone. So nothing wrong if the risk is within your accepted level. Next time again when prices reaches into this zone, there is nothing wrong in taking a trade, because high liquidity zone, the advantage is until it is violated, we can keep on taking the trades. One day it will get expiry period, that day the zone will be violated. Until that time we get multiple trade opportunities. Okay, and here this is the another next 15-minute zone. Here we didn't have a proper 5-minute zones. Even if you consider rally, base, rally, this zone is already violated, this 5-minute zone. So that's why it is not valid, this rally base. So at present we didn't have any valid fine-tuned 5-minute zone. So we didn't plan any trade inside this 15 minutes area. But here in this 15 minutes area, we can plan a trade. You have a rally, you have a base. Again we add the hidden body. This is going to be again another rally candle. And see, after that you have excellent follow through candles. So this is a very good zone. And again here you have ERC candle as a leg-in, you have 2 base candles and again a rally candle. Drop base rally. See, today prices entered into this zone. They couldn't reach the target zone because from here to here 1:4 RR is there. But later on it is violated. Finally this trade is stopped out. That way ABB first trade has given 438 rupees loss, which is a negative ROI 0.2%. It is a very minimal loss. Very minimal. 0.2% is very, very minimal. It's a negligible loss. But anyway, the zone is violated. But next what happened? Again prices entered into this zone. At what time it entered? At 12 o'clock, 25 minutes candle. 12 o'clock, 25 minutes, 5 minutes candle. We got a trade. Next candle also, it was in the zone. And after that it was started moving. And finally in this candle it reached the target. The 15 minutes target. And in this way, ABB has given 10,156 rupees profit, which is a 4.8% ROI as per one futures margin cost. Because always we calculate ROI as per one futures margin cost. So this is about ABC. Still, market is still not completed. I think 1 more minute is left. Because already our trades are closed. So that's why I started recording early. And next one we got one more successful trade from Bharat Forge. This is a 75 minutes high liquidity supply zone. A trade from 75 minutes high liquidity supply zone. This is what identified by our software. Drop base drop. So this is the one. It looks like this zone is violated today, right? Yes, it is violated, but before that we got a good trade. Excellent trade. It reached the 15 minutes target. That you will understand once we get into the 15 minutes time frame. So this is the 75 minutes zone, drop base drop. And we fine tune this drop base drop with 15 minutes time frame. In the 15 minutes time frame, we have a ERC candle as a leg-in, and you have failed ERC. Then you have 2 base candles and then again a drop candle. So this is the way we have fine-tuned with 15 minutes time frame. And this 15 minutes time frame again fine-tuned with 5 minutes time frame. So let us go to the 5 minutes time frame. Look into this, you will get clarity once I zoom this chart. Now you see, you have a rally candle, you have a base candle, and then you have a drop candle. This is looking like a base candle, but actually it is a hidden zone. Why it is a hidden zone? It looks like a base candle. Generally, people who are not aware of hidden body concepts, they think this is not a zone at all. Actually, there is a zone which is hiding. From our naked eyes, this zone is getting hidden. So that's why I named it as a hidden zone concept. You already learned in our training lessons 9.3 and 9.4. In our training videos, I have explained this concept. See here, from the low of this candle, from the close of this candle, you just add the body. This is the previous close. Add the body. The moment you add, you get entire body up to here. And the candle, this is a very big candle. Almost, what is the length this candle is having? Almost similar length this candle is also having. Almost similar. This is a rally candle. So we have a base candle and then a drop candle with hidden body. So here we have actual institutional. See, you can draw a zone like this. But to minimize the risk, we added up to type 2 proximal, and moreover, the risk is very, very minimal. Even if it is, suppose prices here, if it fails, we get a very minimal loss. That is the advantage for us. But today we got the trade in this candle. This is not a 9:15, this is 9:15 5 minutes candle, but not a 9:15 1 minute candle. 9:16 we got the trade. So definitely our trade 100% executed. Will execute. It would have been executed. Let me go to the 1 minute time frame so that you will get clarity. So this is the morning 9:15 candle. The candle is closed. After that again it opened here and again it went. So we got, it went a little deep inside this zone and then again came down. See here, it went deep. It didn't hit the stop loss, but and after that see how sharply it has come down. There was a moment, in case if anybody would have missed, maybe you would have got another trade in this candle. Trade opportunity, I'm saying trade opportunity. But this is the perfect trade, 9:16 candle. After that market was moving towards the 15 minutes target, and it reached the target at 10 o'clock 33 minutes. So that means almost in 2 hours the trade is, in 1 hour, in 1 hour 15 minutes the trade is completed. Okay, I forgot to show you the target. The target is, because this is a short trade, the target is in the 15-minute zone. Drop, base, rally. But rally candle is not really great. It's like compromising and drawing the zone. Why we compromising and drawing? Because this is the 15 minutes target zones. Okay, anyway, there is no harm in compromising and drawing the zone. Or what you can do, drop, you can keep all the 3, 4 in one area, and again you can consider this. But the problem is, I'm not convinced this is a medium size candle. It is a little bigger than medium. So that's why what I did, I have drawn the 15-minute zone. For clarity point of view, I fine-tuned in 5 minutes, because the order flow is there or not. See here we have excellent drop, base, rally. We got the trade and finally it reached the target. because there is a pro gap. Suppose if you are having any fear, maybe you would have exited here. Let me draw a horizontal line. Sorry. There is a horizontal line. Maybe somewhere here you would have kept your target in case if anybody is having fear, because sometimes pro gaps may not allow the prices. Or another option, you can use a trailing stop based on 1 minute. Once the prices reach the pro gap area, we can keep a trailing stop. Something like this. We have a drop, base, a drop. If this is violated, you could have exited. But prices came down and again picked up the orders and came here and finally reached. Maybe again, see here it has created one more rally, base, drop with hidden body. At the time what you do? You will revise your target. That is what trailing stop. Why I'm explaining, it's like a revision for you people. First let me change the color. Initially this was your trailing stop. Now you revised. In case if you feel because of the hidden, because of the pro gap, if you feel this zone will, prices won't reach the target, at the time you have to use such kind of techniques. Drop for base candles, again a drop candle with hidden body. And again you see here drop, base, drop, again with hidden body. Now what you do, again you revise the target. This is going to be new drop, base, drop. If this is violated, you could have exited. And after that again, what happened? Again drop, base, drop. Now again you revise your, this is rally, base, drop. And finally you reach your target. In case you feel still you want to grab more profit, you will continue. Instead of exit, you will continue trailing stop loss further. But what is the latest one? This is the one. So this is violated, you would have exited here. If you don't book your profit, you would have exited here. It's all depending on your strategy, whether you want to exit here or you want to further, looking for more profit. If you are thinking this zone will violate, this 15-minute zone, if you have confidence, instead of exit in this area, what you can do, you can again further continue your analysis based on the trailing stop loss. If that is the case, your trailing stop loss is not further continued because it is stopped out here. You would have exited in this candle, somewhere in this candle. So this is the reason, this is how you need to plan for booking. But anyway, this is the perfect trade to exit in this area, because the 15-minute zone we fine-tuned with the 5-minute zone and we identified a proper order flow here. Because pro gap is there, by the time it reaches, because the price is consumed all the order flow within the pro gap area. By the time prices reaches here, definitely the supply would have been weakened. There are less chances of breaking this zone, according to my experience. So what is the decision I will take? Okay, it reached the target, let us exit. Because supply is weakened, now demand will dominate because prices entered here, now it will start pushing the prices. So that is how again prices further moved. Again came down, once again it picked up the order, see, prices went little deep. So in this area, order flow is very, very strong. So that's why second time it didn't further, it didn't move further down. Once again it picked up, and this time this entire high liquidity zone is violated. because all the existing supply has been consumed within this area. If at all any new supply, that has been consumed within this move, and no more sellers in the market now for this particular stock. And after that, prices were started moving and entire this high liquidity zone is violated. Maybe because this zone is having a very strong order flow. So this is how you should try to read the price actions. See, sometimes you need to take decisions by mixing several concepts. Why I decided to exit in this area? The reason is the supply would have been weakened. On what basis I am justifying my argument? Because it is a pro-gap area, a lot of demand might be there. The entire demand might have consumed this supply. By this time prices reached our target, our supply would have been weakened, and the strong order flow in this fine-tuned 5-minute zone pushed the market up. When you have such kind of clarity, you need to exit. There is no meaning further depending on the trailing stop loss. You can depend, but see, today trailing stop loss is hit. Maybe you would have missed some more profit, which you are supposed to get if you would have exited here. Because we have a strong justification, we exit. And already it gave good RR. Even though it did not reach 6% our average intraday ROI, but still it gave a very good RR. Bharat 4 has given 4.2% ROI as per one futures margin cost. And it has given 7,325 rupees profit as per one futures lot. This is for one futures lot, this is the profit. In one futures lot, margin cost, this is the ROI. And these are the trades, and another one is SAIL. SAIL is a daily high liquidity demand zone. It's a daily high liquidity zone. This is a drop base rally. See again, this is a hidden zone. Why hidden zone? Because there is a hidden body is there, and this candle is looking like a base candle. The moment you add the hidden body, this is looking like a rally candle. Such kind of hidden zones will be having strong order flows. See, already it gave 2 tests, but it didn't reach up to the fine-tuned area. Okay, how I fine-tuned? Let us go to 75 minutes time frame. So in the 75 minutes, we have a rally, 3 base candles, and again a rally candle with pro gap. Then what is this zone? Probably here you may expect a concept at the distal line of this zone. We have a zone here. That means in this area you may find lower time frame zone as an horizon to the higher time frame. Such kind of concept you may see here. But anyway, let us look into the lower time frames. Lesson 22 concepts. Lower time frame zone as an horizon to the higher time frame zone. Such kind of zones will be having strong order flows. But anyway, here we already have found multiple zones here. So I am moving on to the 15 minutes time frame. So in the 15 minutes, observe carefully how I fine tune. So here we have, I am considering this as a leg-in, 1, 2, 3, 4, 5, 6 base candles. So this entire thing, this is a drop candle. So this entire thing is a 15-minute zone. And here again we have a rally, base rally, and this rally, base rally is having a confluence at the distal line. The distal line confluence, most of the time, if it is within the zone, this entire zone will be within the zone. But this order flow started before this 75-minute zone creation. Rally, base rally, now 75 minutes order flow is started here. So that's why this lower time frame 15-minute zone is an horizon to the 75-minute zone. But still this is not sufficient. you should also find a 5-minute zone also inside, because we need to fine tune to 5 minutes time frame. So this is the way we got two zones. So we have one zone exactly within the zone but at the proximal line, and this is the zone intersected at intersection at distal line, because it is an intersection at the distal line. So this concept is a lower time frame zone as an horizon to the higher time. So it picked up the orders from this zone. After that, this entire move is started. You get better clarity once we move on to the 5 minutes time frame. So how I fine tuned in 5 minutes time frame? Let us verify. Let me zoom. See here you have a rally, 3 base candles and a rally candle. Rally, 3 base candles, rally. This is the type 2 proximal. See, because of this gap, all these candles becoming very small. That's why I am hiding this. So the biggest problem with trading view is when there is a gap, the earlier to the gap, all the candles are becoming small. So that's why I am hiding that gap. The moment I hide, you get clarity. Rally, base, rally. But the thing is, after that it came and picked up the orders at the distal line. See, then move started. The move, and again next day with a pro gap. Maybe this zone might be having a strong order flow. Still you may take. Don't say it is a tested zone. Maybe those who consider it is a tested and don't want to take any trades in this zone, okay, you can leave it. But those who believe, it just touched the distal line. Not distal line, I'm sorry, proximal line. It just touched the proximal line and then immediately the move started. That means there could be a very strong order flow in this area. That way you can understand. And next here. So the 15-minute zone is the horizon to this 75-minute zone. So we have fine-tuned. This is the rally candle, 2 base candle, and again a rally candle. Maybe this is the leg-in, base and rally. Within this area, you might be having a strong order flow. See, the entire 75 minutes just picked up the orders. It didn't go inside. Next time, prices may go a little below this, and again it will move. Next time when they reach. Because such kind of zones, the lower time frame, see, this is the 5-minute zone. And entire 75-minute zone picked up the orders from this zone. The 5-minute zone at proximal line, it picked up the orders. See both the candles, see the rejections. That means strong order flow is there in this zone. So these are the 2 trades planned from this sale, but today we didn't get a trade opportunity. So today we didn't get an entry. Even prices didn't enter into the zone. This is the today's morning candle. So these are the high liquidity zones we identified in our previous report. Hope this information will be useful to you for your further study and analysis. Let's all meet again in our next video. Thank you.